So there's a property.
Yeah.
Physical property.
Multifamily.
Right. It's a multifamily.
63 units.
It's a multifamily property. The sponsor, effectively the owner of that property, needs a loan.
That's right.
Okay. They come to you.
That's right.
Okay. You say, we'll provide you the loan in the form of
a loan.
A classic loan.
That's right.
Okay. So you're going to give them cash.
That's right. Term financing.
Term financing. And how long's the loan? Just
10 years.
10-year loan. Okay.
That's right.
At above market rate or below, or what's
no market rate interest rate?
I'm just trying to slow the whole thing. Okay. Now let's introduce the Bitcoin piece into it.
That's right.
So no. Explain how the Bitcoin piece then relates. So the loan has been provided.
The use of proceeds is to pay off the existing financing. So
the use of the proceeds
of the loan is to retire the existing mortgage.
Right. So there's an old mortgage.
Gone.
They're going to pay the old mortgage off.
It's been paid off.
Okay.
Now they have a little bit extra money to make some improvements in the property.
Right. So a little bit extra cash. So the amount of money you've lent pays off the old loan.
That's right.
It's also you have a little bit of extra to fix
Improve
stuff up.
the property, fix stuff up.
Yep.
And then with the remainder, which is a little bit
so you
more.
have even a little extra, an extra
right.
turn.
And that, instead of cash out, it's Bitcoin in. And we use it to purchase some Bitcoin and add it to the collateral package of the loan. So now our loan is supported by both the traditional asset, the 63-unit apartment building, and the Bitcoin.
Okay. So the loan, it was maybe $2 million more, so that's how you get the Bitcoin out?
Exactly right. So it's
on the assumption that the Bitcoin's going to rise faster, and that will become an asset.
Over the life of the loan, for sure. So we think on the downside, this provides us with much better protection compared to a traditional lender, because a traditional lender, if something goes wrong, they have to recover against that particular building, which is idiosyncratic risk. Something might happen with the maintenance or what have you.
But that also requires conviction on your end that Bitcoin is not a volatile asset over time, and that is either going to go up or at least stay where it is.
Well, that's by fusing the Bitcoin with credit and by fusing it with traditionally financeable assets, it gives us the luxury of expressing that medium-term view on Bitcoin, and that's what's key. It's volatile in the short run. You know, I mean, minute by minute today, who knows, it could cross 100,000. That would be exciting.
How long's the loan?
10 years.
10 years.
And the minimum hold period for the Bitcoin is 4 years. So what we say to the borrower is we say, look, you can repay the loan at any time for any reason with no penalty, which is a really valuable feature compared to a traditional loan.
Yeah, that's like a home mortgage.
Like a home mortgage almost. That's very unusual for commercial financing. But what we do say is that to the extent that the loan is repaid at year 4 or earlier, the minimum will release the property. But the minimum length of time that the Bitcoin has to stay in escrow is 4 years.
Andrew,